Welcome. In this video, can Xcn coin be 10 cents? We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand. When we closely examine the chart, it becomes evident that the price action is moving within a clearly defined consolidation pattern. This structure closely resembles a classic technical analysis formation known as a flag pattern. These types of formations typically appear after a sharp upward or downward move, followed by a brief period of pause, and are widely interpreted in technical analysis as potential trend continuation signals. In this context, looking at the current price action, we see that after a steep upward wave, the price entered a consolidation phase within a defined range. This horizontal or slightly downward sloping compression zone represents the flag portion of the formation, while the preceding sharp rise forms the flagpole. Flag patterns suggest that the market is taking a short breather, but the potential for the trend to resume strongly remains high. This consolidation within the flag is typically accompanied by a decline in volume as market participants enter a state of uncertainty and await a clear directional breakout. This behavior is observed as the price repeatedly touches the support and resistance lines, forming zigzag movements within the flag. Currently, the price has tested the upper boundary of the flag, the resistance line, multiple times, but has yet to break through it decisively. This indicates that market participants are closely watching this level. If the price breaks above this upper resistance line with strong volume, it would confirm the completion of the flag formation and signal the continuation of the trend. The general rule of thumb in technical analysis for flag formations is that the price movement after the breakout could mirror the length of the flagpole. In other words, once the price exits the formation, there is a high probability for a move equal in magnitude to the prior sharp rise. This presents traders with an attractive and measurable risk-reward opportunity. From a psychological perspective, the movement within the flag can lead to indecision among investors. The horizontal or slightly descending band within the flag can be interpreted as a sign of fatigue. However, this fatigue is often seen as a period during which buyers are regaining strength to re-enter the market. While selling pressure remains limited, those waiting for the right buying opportunity begin to accumulate. Once the breakout occurs, these sidelined buyers can quickly jump in, resulting in a strong price surge. One of the most important characteristics of flag formations is timing. Price cannot remain within the flag indefinitely. Typically, the flag portion completes in a time frame approximately 1/3 the length of the flagpole. At the moment, it appears that this timing window is nearing its end, which suggests that a breakout may be imminent. If a sudden increase in volume is observed during this breakout, it will further confirm the breakout is legitimate and that the market has determined its direction. In conclusion, the price action is technically consolidating within a classic flag formation. This structure is generally regarded as a continuation pattern unless an exceptional development occurs. Therefore, if the price breaks above the upper band with strong volume and the breakout is confirmed, the potential for a move equivalent to the length of the flagpole becomes a valid technical expectation. This scenario would serve as a significant signal not only for short-term traders, but also for medium and long-term investors. In short, an upward breakout from this area could reaffirm the strength of the trend and ignite a new wave of bullish momentum in the market. For this reason, let's look at other metrics to make the analysis more conclusive. Stay tuned. When viewed from a broader time frame, the chart clearly shows that the price is in a critical and strategic transitional phase within the long-term framework of the Elliott wave theory. Although the recent structural correction movements may seem confusing to investors, they hold significant upside potential for those who understand the bigger picture and remain patient. According to the Elliott wave system, the current structure appears to indicate that wave 2 is nearing completion and that the price may be signaling a transition into wave 3. According to Elliott theory, a trend typically unfolds in 5 main wave movements. Waves 1, 3, and 5 are impulsive waves that move in the direction of the trend, while waves 2 and 4 are corrective in nature. The phase we are currently in seems to follow the completion of the first impulsive wave and is likely approaching the end, or has potentially already completed, the wave 2 correction. In this context, we may be at the beginning of wave 3, which holds significant importance and high potential for investors. Second waves are usually periods of uncertainty and consolidation that test investor confidence. During this phase, prices may pull back or move sideways, leading many participants to exit positions due to misleading signals. However, this correction phase also serves as the groundwork for a strong upward move, during which smart and patient capital tends to accumulate. For this reason, third waves are typically the longest and most powerful trend waves, as market participants begin to recognize the trend direction and larger inflows enter the market. Accordingly, technical analysis tools suggest that the third wave is expected to reach at least the 1,618 Fibonacci extension. A more aggressive move could even extend to the 2,272 level, which would not be surprising. However, it's important to note that these targets are not expected to be reached in the short term. Due to the nature of Elliott waves, achieving these targets typically takes time and is often observed on weekly or monthly charts. Therefore, investors need to remain patient and avoid making emotional decisions during periods of price volatility. Additionally, for this long-term uptrend to begin, certain technical and psychological thresholds may need to be surpassed. These include the breaking of downward trends, rising volume, momentum indicators like the RSI showing bullish signals, and macroeconomic factors that support the overall market move. In summary, the current chart structure points to a highly critical transition period within the long-term Elliott wave framework. With the completion of the Wave 2 correction, the potential for Wave the 3rd of May be coming into play, and this wave could present a significant upward movement reaching much higher levels. However, this move will likely develop over time and in stages, requiring patience and strategic planning. As long as one adheres to the discipline of technical analysis and remains emotionally resilient through fluctuations, this process could offer substantial gains. And since Wave 3 is one of the longest waves, patience is key. One of the most notable signals currently visible on the chart in the MACD indicator is the upward crossover of the MACD line and the signal line just below the zero level. This type of crossover is typically considered a strong indication of the end of a downtrend and the beginning of a new upward wave. The MACD line represents the difference between the short-term and long-term moving averages, while the signal line is a smoothed version of this difference. Therefore, when the MACD crosses above the signal line, it suggests that short-term momentum is increasing and that a potential shift in market direction is gaining strength. Particularly when this crossover occurs near or below the zero line, it is often interpreted as a positive reversal, increasing the likelihood of an upward movement. In the current situation, the MACD line has clearly curled upward and crossed the signal line from below. This indicates that selling pressure among market participants may be decreasing while buying strength is starting to build significantly. Additionally, we observe that the histogram bars are beginning to transition from negative to positive. This histogram shift is another technical signal confirming that momentum is turning bullish and market dynamics are beginning to trend upward. Beyond these technical readings, such signals from the MACD also directly influence investor psychology. This indicator has gained credibility over time and is actively used by many algorithmic strategies. As a result, once a MACD crossover occurs, it ceases to be just a technical signal and often triggers a wave of new position entries from investors. This can create a chain reaction that genuinely drives the price upward. However, it's important to note that the MACD is a trend-following indicator. These types of crossovers typically do not occur at the very start of a trend, but rather at the moment of reversal or shortly afterward. So even if the signal comes with some delay, it serves as a strong confirmation of a trend change in the medium to long term. The current upward crossover we are observing in the MACD suggests that the downtrend has likely weakened significantly and that buyers are beginning to regain control of the market. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.